so glad that you could make our time to join us on today's episode of Tax Matters. Last episode, we had as guest on the program the acting executive chairman of the Federal Revenue Service in the person of Mr. Samuel Sunday Ogungbeson. Because of time constraints, we couldn't finish that interview. And we did promise that the discussion would continue on this episode. And so we are back with the acting executive chairman. Sir, we thank you for making our time to talk to us once again on Tax Matters.
Always glad to be with you. Thanks. Thank you.
Your closing thoughts on the previous episode was about how you are using IT, information technology, to drive the system. We spoke about the concerns or the challenges of the taxpayers with regard to withholding tax credit note acquisition and acquisition of tax clearance certificate, and you painted a picture of a greater today, like you said on that episode. Maybe you want to recap some of the things that you said about how acquiring withholding tax credit note and acquiring TCC would no longer be a problem going forward.
Okay. Let me also recap on what we think are the challenges. I think I'll begin with that. We know that today many taxpayers are unable to get their credit notes, which they need at the time of preparation and filing of their income tax return for a particular year. All those taxes they have suffered, they expect that they will have a credit note to enable them reduce the tax. We know also that there are a lot of people who need tax clearance certificates, but they are not able to get, either on account of the fact that the credit note which have been issued, which they hope to use to reduce their tax liability, are not available. And on the side of individuals, you have reports of under-assessment. And the question you will ask is, who has under-assessed? Again, it's the fact that we don't engage regularly with the taxpayer or our tax agent. Otherwise, those kind of situations will not have arisen. You are using IT to drive payment processes in their own organization too. And once we give them a table and ask them to upload it onto their system to help them do the deduction regularly, I believe that if they are complying, you cannot go back to them and say that you are not doing the right thing or they are under assessment. But I think the problem is that in most cases we never signed off. And because we don't sign off, there could be some consequential errors which we never bother to. But when they now want tax clearance certificate and they prepare their computation, they will see that they have remitted less than should be expected from that person. And of course, they can't give away the taxes. They have to recover them. So you can see that you can't get tax clearance certificate because the money you suffered, the record does not exist with the tax authority. And also, another reason is cases of under-assessment, like I said. You cannot on your own just make the adjustment. If you do, you ask the taxpayer, go and pay. We're then saying that IT is now being employed, to address all these problems. So that if you forfeit any withholding taxes, that is, you suffer any taxes in the course of your doing business, that information will go to the relevant tax authority automatically. At the moment, ITAS is relevant only for FRS. It's not applicable at the other level. But what the states are doing today is ensuring that all their taxpayers are registered. That information will then be available to us. But not all the states have keyed in. There are about 3 states that are still not on that platform. We had a meeting with the Central Bank governor. We went there to request him to support us in ensuring that every individual is registered for the purpose of tax. And he's promised. He's asking for our letter, which identifies all the issues we raised at the meeting we had with him, and then he can assign it to different people, to handle. For those states who are yet to join the bandwagon, what we intend to do is, if the CBN governor can help us announce to all the banks that from today, anyone who has no TIN cannot operate his account. You cannot operate for anything, not even lodgement, talk less of withdrawals. Once that happens, individuals in the various states, even where they are not complying today, will find themselves coming out and going to register in the offices of FRS. Because we have this facility which our officers can put to use, you know, when it comes to collection and registration for taxation. So that's how we want to go, because we try to engage with those states, about 3 of them, one in the north, one in the east, and one in the southwest. The 3 of them, the other 33 are cooperating well. So what we will do is to say to taxpayers in those jurisdictions, please, you are free, go to FRS and register. Ultimately, the information will still be available to even the states, you know, at the end of it, because there's a mandatory field, which you call addressing and all those, they use to ensure that you can have correct information on them. So I said greater today because I know that those problems of yesteryears will soon become a thing of the past with ITA's launch in Nigeria.
You are the chairman of the Joint Tax Board. What is your vision for the Joint Tax Board? What do you want the Tax Board to be doing?
You see, I want to work together with my colleagues. Again, it's about engaging. I am carrying it farther than one might want to expect. You hear engagement and collaboration all the time. Why shouldn't we speak to ourselves on matters of taxation? For example, look at the way some state governments disrupt business flow in the states. They think that they have more powers or more knowledge to collect taxes. What taxes are you collecting? Personal income tax. The information resides with the FRS. There are individuals at the state level who are doing their enterprises. Okay, I know those ones exist. But what about majority who are corporate entities and also within their jurisdiction, but they are paying taxes to us? So you can see we're looking for quick wins and the best approach towards achieving efficiency.
But people are asking for a stronger JTB. I don't know how that tallies with the functions and activities of the FRS. How do you marry the two? They want the JTB to be more active in the tax arena.
They cannot do more than the law has granted them. The law says the function of JTB is to harmonize and ensure uniform interpretation of tax laws. Number 2, to impose his decision, you know, on his members, you know, so that we can have a common understanding. He doesn't have more than that. Once he tries to do something different from those 2 or 3 functions, it is no longer JTB. So what will I be doing myself is to talk to them, to say to them that, look, we are friends, let's talk together. I mean, it's one country. If you are creating bedlam in the state, it's going to affect my own collection. So that's why we need to talk together. And I need to say to them that my own idea of working together as one is for us to develop an MOU. I'll help you collect your taxes. I'm not going to ask for cost of collection because I have money. I'm not going to pay your money, your tax revenue, into the account of center, because that has always been the fear. Oh, you can't trust FRS. FRS is an agent of the center. And so every money will go to the center. On matters of personal income taxation, no. We will give your money back to you, but let's work together. We can go out together and do joint audit. Let's not disrupt the peace of these companies. They go to borrow money. They are building the country, and now you want to disrupt their business. Quebec and Canada, they have that kind of working MOU. Will help you collect. If a state says he wants to go solo, no problem. By the time you're saying the successes we recorded with the other members, you will come back and say, let's work together. Because I cannot imagine a situation where I have all the information you need about corporate entities in your jurisdiction. I collect taxes from them. You send somebody else to go to those same companies and look positively at, you know, the activities of the corporate entity. That's the difference. But the information resides with me. You'll be looking for what is not lost out there. When the information is already with me, can't you talk to me? I'm saying, okay, we will talk, but let's even agree that I will help you do it. And I give you more money. In 6 years of sales tax, 6 years, the total money collected was 2.4 billion in the same country. But the moment we started VAT, that first year alone gave us 8.5 billion. What does that say to you? A group can do it better. Let's not hate ourselves, let's not fight. Let's work together. It's one country.
The concern is about fiscal federalism.
What is fiscal federalism? Fiscal federalism says collect your taxes. It doesn't say you cannot help yourself to collect taxes. That's true. It doesn't say so. It's just defining for you what areas you should focus attention on. What powers do you have? If you don't have the resources to do it, it means you won't do anything. You're losing revenue. Somebody says it's going to help you do it. There's nothing wrong with it.
Talking about revenue, are you convinced that what you currently collect under the value-added tax is adequate? Are you covering the field? Because you spoke about the operation of sales tax prior to the commencement of VAT and how the states were not doing too well. Now some of them are thinking that, oh, they can collect VAT on their own, right? Are you covering the field? Because when we talk to people, they say, let them collect from everybody who is supposed to be paying first before they think about any other matter. Are you covering the field?
I'm a taxman. I will tell you that within limits of our resources, we are trying. When you say covering the whole field, two things come to my own mind. It's about how much am I putting on the table at the end of the day or at the end of every month. I will tell you that I'm putting enough sufficient VAT collection. Remember that, say, when you operate a system, we are operating not a classical VAT in Nigeria, because go to other countries, they will tell you that classical VAT requires you to give back to the taxpayer what he has paid by way of input taxes. Because value-added tax in Nigeria is a multi-stage tax system. You are not the consumer, but the target is the consumer. You are merely an agent in the process. You collect ab initio, you remitting. By the time you sell your product, you can recover your money. The money that you paid earlier on the raw materials, you recover it. Now, but in Nigeria here, there are a lot of input taxes which are not allowed as creditable. In our own case, we limit what should be regarded as creditable input tax. By so doing, you are depriving the taxpayer of his entitlement. Number two, most countries of the world will grant you a refund of VAT paid on physical assets. Fiscal assets. And they could be huge. But today, those are also being disallowed. And they ask you go and add it up with the cost of the assets in the capital allowances schedule. But these are all money that should be given back to the taxpayer. So, how do I know that we're even putting more on the table than ordinarily should go to government. I have told you that we are not operating a classical VAT. VAT is consumer-oriented. So with the rebasing of the economy, we have what you call aggregate level of consumption. We know what is the total value of consumption across the whole sector. Nigerian Bureau of Statistics, they have this data as well. So for us, it is to say, what is that figure? Times 5%, because VAT is 5%. You get a figure. You are then projecting that for exempted goods, what can we provide as VAT from that source? Deduct it from 5% of the gross aggregate. That is your consumption figure value now. 5% of it. It will give you a figure, isn't it? Also try and remove products which you consider are allowed as exempted under the law. You are reducing, isn't it? The balance, tax at 5%. That's what you should be bringing in. There's no magic about it. It's just like you are talking about tax to GDP ratio. Your GDP, you know. Your total taxes, you know. Okay, just place one under the other. And then it will tell you how well you are doing. But what we often do as mistake here is that we will only be looking at the Federal Inland Revenue Service collection in calculating tax to GDP ratio. Nobody talks about the proceeds from the state's government. All of them are collecting income taxes. What I have done now is to collate information from all the state government. I haven't got the figure for 2014 yet. Only about 10 states have given me. The rest are still working them out. Pull out everything and add it to our own personal income tax at the center. That gives you a view of total collection from personal income sources. Add it to CIT and all other taxes. That gives you a fair idea of the ratio. We'll begin to do that now because we now understand that the information is readily available. So, in all, you know, you never can praise yourself well enough, but I can say that we're trying. There's room for improvement. But I'm saying that even if I become more effective and efficient in my system, and I could bring in more VAT revenue, the fact that I still have not agreed to give back to the taxpayer what truly belongs to them will make me continue to report excess collection. Until we're able to do that, we're trying to rewrite the law now and give back to the taxpayer. We will have done this many years past, but we thought it would be a total package towards the need to increase the rate of VAT from 5 to 10%, so that all those cleanup will give back to you, so that we can come back here and say we are implementing the classical VAT now, but at the rate of 10%. We are a member of ECOWAS region, the ECOWAS body. And ECOWAS has prescribed that it allows every government to determine its rate of VAT, but advises that as members of one family, there are certain features that must be inherent in your VAT system. It must have an exemption list. It must have a taxable list. It must have a threshold below which you do not you include them in the tax net.
Now, what do be this? Make it say where you. The thing where you said me too much, calculation is where okay.
Madam, me correct now. Now the price be that.
You are playing with fire, so me, I know say they never search fast for picking things. Oh, you want to play me, why you? You want to teach me a bit?
Madam, now everything with the add back on top. Now so with the seller.
Madam, you dey correct o.
Stop!
Good day, madam. Any problem?
Problem there.
The thing be say una not supposed to charge VAT for baby items and other things wey dey for VAT exemption list.
Sam.
Chai! This one na wayo receipt o. Correct receipt suppose contain the things wey you buy and the VAT wey dey on top. Then other items wey not get VAT, you go put them separately. Madam, I apologize, You go change that.
Change that.
To pay VAT dey compulsory, Now government they use to make our life jolly, to collect and pay sharply to government. Is they correct?
FIRS, it pays to pay your tax.
We are still on to Tax Matters, and our guest is the Acting Executive Chairman of the Federal Inland Revenue Service, Chairman, Joint Tax Board, Mr. Samuel Sunday Ogungbeson. Sir, before we went on break, you were talking about the ECOWAS prescriptions for operating value tax system within the sub-region, that there must be an exemption list. We just played that out in the advert that we played just now. There must be a taxable list, and there must be a threshold. Talking about that threshold, we recall that about 2 years ago, when you were head of the Field Operations Group, you spoke about the plans of the service to have a threshold. That is, small business owners may not be compelled to collect VAT on your behalf. Have you forgotten that talk about threshold?
No. We cannot forget it because it's part of the review of the current VAT Act. First and foremost, what I need to add to what we discussed earlier is the fact that there are 3 different types of VAT system. You have the gross product type, you have the income type, and then you have the consumption type VAT. Consumption VAT type. What we have operated to date is the gross product type, which allows us to deny companies legitimate input taxes paid on either not on materials alone, but on their consumption. But the consumption type allows you fully to recover all those things. Even if you pay input taxes on capital goods, which you are using for your business, you are allowed to claim it. But here, what we have done is to say that if it is not input taxes on materials, which you will use for production, or input taxes on goods meant for sale, you should go and treat it along with the expenses in the P&L account. The implication of that is that when they do treat it in the P&L account, at the end of the day, they are not recovering the full amount. It's already adjusted because it's taxed at the rate of 30%. So probably what they are getting is only 700%. With the threshold, we are suggesting that a threshold of, at that time we said 40,000 naira, which is about 6 million. Rate of tax at that time was about, rate of exchange was about 150 naira to $1. So we estimated that 6 million would be okay. If your turnover is below 6 million, don't even bother coming into the system, talk less of collecting for us. And you know the benefit of that is that they themselves will go to make purchases. In the course of making purchases, they pay VAT. But we are shutting them out from coming to claim refund of that. You understand? They will not be privileged to claim the refund of what they have paid on their stocks when they are purchasing, if they are small-time sellers. But without a threshold, which is the situation in Nigeria today, is a market for everyone.
What about the monthly filing of VAT? This is cumbersome.
It is. I agree with you myself. In fact, you mentioned something earlier on which requires them to file every month, even if it is nil. There's no rule in our law that says file nil return. We presupposed at the commencement of VAT introduction that everyone will be trading and everyone will have something to remit. But now, a situation which we never anticipated is unfolding. And that is that people could be in business yesterday, they are out of business today, and so they cannot file. For me, under this dispensation, it's enough to write a letter to let the revenue know that due to so reason, we no longer can file. We will notify you when we pick up again and we're ready to do business.
Finally, sir, revenue is dwindling. Money accruing to government is dwindling. And you, along with maybe customs to a lesser extent, are the ones that we all look up to bail Nigeria out. The annual tax conference just ended, and the common talk, to summarize it, that was not exactly the thing, but it's like taxation to the rescue. Are you confident that you can rescue Nigeria? That the FRS can rescue Nigeria?
All that we have been doing all this while is to rescue Nigeria. Remember, I told you earlier on that we're promoting improved taxpayer services in collaboration with taxpayers in order to make taxation the pivot of national development. So we are mindful within ourselves that we need to continuously work together to make taxation the pivot of national development in Nigeria.
We thank you very much for welcoming us into your office. We wish you the best of luck, and we hope that in no distant future, when we'll come back to talk to you, the numbers will be positive numbers. They are positive now, but there will be numbers that we can cheer about. Thank you very much for your time.